Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and we have the FOMC beginning today and concluding tomorrow. This will be highly market moving upon conclusion tomorrow, so all eyes are on the Fed and the FOMC for Wednesday. But in amongst all of this craziness and volatility, it's important to keep a perspective, and that perspective would be that we are, as of yesterday, 53 days until the Bitcoin bull market begins. So if you're wondering why 53 days, and it's actually 52 from today, of course, this is because the 4-year cycle low is due around the 11th of November. It could be 10% either side of the 60-day cycle low. So in the real world, this is around the 11th of November, plus or minus 6 days. Assuming Bitcoin isn't broken and going to zero, that's where the final bear market low should form. And so here I have Bob Lucas, the king of cycles. It's interesting that we both have the same count for the cycles. We're both looking for, I think he's looking for the 10th, I'm looking for the 11th of November, so we'll see how this goes. The difference here is I don't think we lose these lows. I've been saying this over and over again. Of course, I'm open to being wrong. Simply a daily close below these lows would prove me wrong. But I don't think we make it down to this 14k neighborhood. However, Bob Lucas thinks we are going to lose these lows and have one more final capitulative move down into the 14 or 13,000 neighborhood. That remains to be seen. But the important thing to keep in mind is regardless of the Fed, regardless of the volatility over the coming weeks, we are only 52 days, did I say, or 53? We're only 52 days away, as of the time of recording, from finding what should be the ultimate buying opportunity over the next 4 years. Here is a chart I posted over a month ago showing a rough sketch for how I thought the bottom would form. The key point, of course, is that whatever happens in the middle is kind of irrelevant, but what I was trying to illustrate is that we likely would not lose these lows and we would form the final low around that 11th of November timeframe before starting a bull market. The 9-year Bitcoin weekly OBV channel is significant if it holds and significant if it breaks. We have never broken these channels before, as you can see. We've always, whenever we've entered the green, we've always held it, and the same is true that whenever we've entered the green, we have actually found the bottoms for Bitcoin before massive upside. If we were to break this, this would be the first time ever. Short-term holder net unrealized profit and loss takes into account only Bitcoin UTXOs younger than 155 days. So the time below so far is significantly less than before. However, the peak low is right around the neighborhood in which you'd expect to see a low, and you can see that here on the chart, that we should start to round upwards and then start a bull trend very soon. In addition to this, we've also had the delta cross shown here. This has already occurred at the prior lows. We've had the deep value cross, and this has already occurred at the prior lows. We've had the pi cycle bottom also occur at the prior lows. And now all that's left is the cost basis cross. This is projected by around the 26th of September. And if you have to think, at least from my perspective, are we asking all of these legacy bottom indicators that have perfectly called the bottom of all the prior bear markets, are we asking all of these to fail and all of these to just suddenly not work anymore? I think we're asking a little bit too much from the technicals. I think the lows will hold. Of course, I'm open to being wrong. And even if I'm wrong, I don't think it's the end of the world, because as I've shown you from the cycle counts, we know that we're likely going to come into this 4-year cycle low around the 10th or 11th of November. And that is going to be the final opportunity to buy the dip before we start to buy breakouts in uptrends. In addition, Bitcoin is entering phase 8, the major bull run of the bullish reversal pattern, exactly similar to that of 2018. So you can see here, it's only a matter of time before we find this cycle low in November and then go. Bitcoin was also in a perfect bullish harmonic shark pattern. Regardless of all of the technicals and any short-term volatility, Bitcoin doesn't care. The network continues to boom, and over 900,000 addresses now hold over one Bitcoin. One full Bitcoin. That is 900,000 whole coiners. We continue to see Bitcoin moving to places that can benefit from it, such as indigenous communities in Canada who are going to start mining Bitcoin with hydropower. It's exciting for revenue generation, according to their economic development chief. So amongst all of the constantly growing signs and worries that the chances of a recession are multiplying all around the world, despite the recession odds still rising for many investors, when this metric rolls over, the past has shown that the S&P 500 bottom is already in. So if we were to see this roll over in the next month or two, then we could likely say with supreme confidence that the June lows will hold. Admittedly, there are a bunch of reasons to continue to be bearish and continue to be worried. The energy costs in terms of percentage of GDP, you can see here, they go backwards. So 2020, 2021, 2022. You can see here for every single nation, they only are going up and by huge, huge, huge amounts. This is not a good look. This is certainly a wall of worry for the market to climb. Not to mention, everywhere you look all around the world, society is on edge and seemingly falling apart. And 65 billion has been wiped out from the global cryptocurrency market cap in the past 24 hours. Volatility is massive. People are losing faith. People are at record levels of pessimism at the moment. But as a contrarian investor, it's crucial to understand public consensus, to comprehend what's priced in and what you're betting against. We know there's these huge walls of worry. We know there's the increase in cost of living crisis. We know that there are the chances of recession multiplying. But the highest gains in the market often come from taking a risk when no one else is willing to take it at a time when no one wants to take it. The UK, though, continues to turn orange. They have opened a place called Satoshi's Place. Here it is, and they have their own website. You can just search Satoshi's Place England, and this will come up. You can scroll down, you can see all the stuff they're working on, which ranges from a lightning beer machine to retro gaming and NFT minters, all this kind of crazy stuff. So I'll let you go and look that up in your own time if you're interested. If you're an FTX user in the UK, you definitely want to be aware of this. FTX is operating in the UK without authorization, warns the regulators. So this is not good if you're an FTX user, if you keep your crypto on FTX, if you use this exchange in the UK, this is something you want to be aware of and keeping your eye on. If the regulators decide that they have not got the correct FCA authorization to operate as an exchange in the UK, or they've been skipping KYC, then all your accounts and assets could be frozen for a small amount of time or a long amount of time. There's really no way of knowing. So this is something that personally, if I was using this exchange, I would be very, very concerned about this. Speaking of concerning regulation, the SEC claims all Ethereum transactions fall under US jurisdiction because the nodes are clustered more densely in the US. Is there a word for that? Of course there is, centralization, but that's not the point. The point is, I've been saying for a while now, I'm concerned about Ethereum. I'm concerned about the trajectory it's on. I've also been saying that if the SEC were to come for Ethereum, like they did for XRP and Ripple, Ethereum could go all the way back down to the low hundreds. And I know a lot of people think that that sort of talk is completely insane, but believe me, if the SEC comes for Ethereum, this will cause an enormous downside risk for Ethereum. I have made several videos, this one here where I hashtagged Ethereum is dead, this one here where I said Ethereum has essentially been 51% attacked because the network is controlled and dominated by a bunch of people that got to pre-mine it. I've made another video a month ago called Bullish on Ethereum, watch this now. I would highly, highly, highly recommend going to watch these videos if you're an Ethereum bull, if you are a long-term holder of Ethereum, because everything in these, none of this is conjecture or speculation, it's all facts. You can check this all for yourself, and basically it shows that Ethereum is, in my opinion, not a good long-term hold. So, full disclosure, Camel holds 0 Ethereum, 0 spot Ethereum for the long term. I've gotten rid of all of it now. I will continue to trade, and I will continue to look for longs, and I will continue to do that live on the channel and update as and when I do it. If the SEC does come for ETH, it could definitely drop into the low hundreds per coin. So that would be something I'm not interested in holding ETH through. If I happen to miss out on a giant pump, then that is what it is. Frankly, I don't want to be part of a coin with those sorts of fundamentals anymore anyway. And of course, if I change my mind, I can always hop back in around the 4-year cycle low for Bitcoin. And if I do so, of course, I will update on this channel. There still remains massive, massive, massive opportunity in this market. The tokenization of global liquid assets is estimated to be 60 trillion with a T. This is a massive business opportunity by 2030, according to BCG. And you can just see here that this is absolutely enormous sums of money compared to the current crypto and Bitcoin market caps. Speaking of opportunity, FTX still has $1 billion in cash for acquisitions, so they're ready to take advantage of this final dip, I would suspect. And despite everyone being super bearish, there's plenty of reasons technically to think that we may not actually end up losing these lows, as I keep saying. The mechanical precedents for a minus 15% swing down after a break of 20% project the Nasdaq composite to hit 11158. So you can see we're not far off this level. This, of course, would not be taking out the lows and would kind of look like an inverse head and shoulders. I'm not really a fan of that as a chart pattern, but we have all of these previous occurrences, 87, 2000, 2001, 2001, and 2002, where this exact thing played out. So if we were to come back down here, everyone would start to get very, very bearish, I would think, and that is where the point of maximum pain is actually higher. The Wyckoff cycles are telling us that, at least for Bitcoin, we are in the final stage. So you can see here 1, 2, 3, then 2 down. We have done all of this and are now in the final stage, what could be the final stage. Possibly a spring to trap the bears and then go is on the cards, but that remains to be seen. We know that Bitcoin and the S&P 500 are correlated. However, in the same period, the S&P increased from 1,000 to 4,000. Bitcoin jumped from $10 to 20,000. So this is a 4x in the S&P versus a 2,000x in Bitcoin. These are completely different worlds. Short-term moves are noise and long-term trends are signal. If you can hold Bitcoin, if you can accumulate it slowly and hold it over a longer time horizon, you will likely change your life permanently. The dollar continues to be a dollar wrecking ball, continues to make what looks to be right translated cycles. We apparently have a day 29 cycle low. I don't actually use the cycles. I don't use the cycle counts for the dollar personally. I don't really trade the dollar. I just kind of keep an eye on it. But Bob Lucas is telling us that likely we've got to see more bullishness from the dollar. So that remains to be seen. However, on the flip side of this, we are right into double resistance for the dollar at the moment. You can see we've got, first of all, the downward sloping resistance line here at the top of this channel, and also the upward sloping resistance here. So we're right into that. This should at least cause a small choking point for the dollar in the short term. Bob, the king of cycles, also showing us that we have a failed cycle, although we haven't just hot knifed through butter. This isn't a hot knife through butter look yet. We're still kind of hanging around in here. Maybe we have to bleed down a little bit like that NASDAQ chart showed before we can find the low. Of course, lose these lows, and then that opens up the true bearishness and all of the bear scenarios with massive shorts and potentially up to 50% downside. But remember, I still think the lows are in, and until we lose those lows, then the lows are in. Again, with gold, we've got this weird price action. We've broken the lows. We've got a failed daily cycle. However, not a hot knife through butter. We're still kind of hanging around in here. I will get to the charts in just a second and show you how I'm going to trade this. Lastly, oil. Bob is calling for 60s. I've been calling for 65s for some time. So I wonder who will turn out to be right. I wonder if we can get down. The key point here, of course, is that if oil can continue to come off, that should help the CPI print come off too, which will be quite bullish for risk assets. And lastly, before we get into the charts, massive downside anticipation is present in the markets. I showed this chart just the other day when we were at 1.5, and 1.5 usually is enough to coincide with major bottoms and reversals in the stock market. However, we've smashed through that and now coming back down, suggesting that quite possibly the lows are in again. So whilst the fundamentals and the fear and the pessimism is at all-time highs, whilst it's really easy to point at everything and say there's no way we come out of this without being in a recession, whilst it's easy to look at all around the world and see the civil unrest and the rioting and the chaos that's ensuing, whilst we appear to be right in the depths of a full reset, the charts and the technicals are telling us to be open to upside opportunity. So starting off with the dollar, as all traders must, we can see that, again, it kind of looks like it's speaking to consolidation before a move higher, although this could, of course, be a higher low, or excuse me, this could, of course, be a lower high that is going to roll over and come down. A lot of what happens to the dollar here will be dependent on what the Fed does at FOMC on Wednesday. We could possibly redraw this, but I don't know, we're just going to keep redrawing it. I'll get rid of this parabola. So for now, here we are. We'll see what happens. All eyes on the Fed for Wednesday. Moving on to the S&P, as I was saying earlier, not exactly a hot knife through butter look, is it? In fact, was this kind of a stop sweep? Are we about to get bullish? I don't want to see upside here leading into FOMC, because usually whatever price you see into FOMC speaks to reversal once FOMC has happened. So, but we've got clear invalidation for trades here, clear setups and entries. Break of this trend line for me will be a long with a stop below this low, and if we get rejected off of here on the Wednesday, then that opens up shorts potentially. I still think these lows are in, as I keep saying. Similarly for the NASDAQ, I think we've got a nice trend line break here. That's one option. You could also draw this slightly different if you want to be more strict like that. So a trend line break of either one of these could open up a trade. If you want to play uber safe to the bull side, then you could trade the red line as a breakout as well. That would be fine too. It's difficult for me to short in this neighborhood because I think these lows are in. So would I want to short here knowing that I think this is probably as low as we go? Probably not. But certainly if we start to lose these lows, then I have no problem targeting much lower numbers. So a little bit more patience. Patience is the greatest tool a swing trader can have. The VIX still kind of up there, isn't it? But still refusing to spike. I haven't checked the futures today. A little bit of red in the futures, so that's fine. We'll see what happens here. I think likely nothing is really going to happen until FOMC. 75 basis point rate hike seems pretty much baked in at this moment in time. I wouldn't be surprised to see 100 for one final rate hike. However, if you've watched my video the other day that is called something like "The USA is insolvent," then you'll know that they really cannot continue to hike these rates for much longer. They are acquiring way too much debt. They are accumulating way too much debt rollover. They're never going to be able to service this debt if they don't back off and pause soon. Gold still kind of hanging around. I drew this scenario the other day to say that this would be like a really nice bull trap and a decent entry for a short, or failing that we take up this low, then we can short from here with a slightly wider stop. So I will keep an eye on that and continue to update as appropriate. Silver has got this weird sort of bull flag or pennant pattern forming, depending on what you want to call it. Maybe it's going to just bleed and lose this low. That would kind of line up with the gold breaking down. That remains to be seen, of course. Still holding a silver miners position, so we'll see what happens here, but likely this is going to get stopped and we'll flip short on gold if that's the case. If not, if gold can break out and actually recover, then these are going to fly, I would think. So that's fine. Kind of know what we're going to do in either scenario there. Bitcoin had this little scam wick, still kind of sideways. I still think this low holds. I think we can possibly long tomorrow if the Fed is reasonably dovish. If not, then potentially look out below. But as I keep saying, I think we're asking too much of the technicals to truly lose this level and start working our way down here. I think too many people will be happy to buy down at 12 to 14k, and I don't think markets like to please people like that and gift them with such nice entries. So again, that remains to be seen. ETH, the centralized blockchain that is, again, I think we can trade this based on the Fed tomorrow. We can be long on a dovish Fed. If not, I think major downside could be on the cards for this coin. If the SEC are going to come for Ethereum, I just don't see how it doesn't end up all the way back down here. But that remains to be seen. It's getting a bit ahead of ourselves. If we can potentially come down here and hold this level as support, then maybe that becomes a long. XRP is doing well, well-ish. We'll see what happens with the Fed tomorrow. The Fed could absolutely wreck this, and I wouldn't be surprised to see that. But I also wouldn't be surprised to see this coin start to fly in the not too distant future. So long and strong, continue to push. Upside is way up. So not too worried about that for now. And lastly, 10-year yields breaking out 3.538% as of the time of recording. So this is going to be putting massive pressure on the US government. They cannot afford to service this debt. I do encourage you to go and see that video I put out the other day called something like "The USA is insolvent." It will show you why I'm so confident that we're going to get a pause in rate hikes very soon by October. Of course, I'm open to being wrong. If we get to October and they're still hiking rates, then we can just say, well, controlled demolition, they're going to blow everything up and great reset us. So that remains to be seen. But if you haven't seen that video, go and check the calculations, go and see for yourself. I really don't think they can continue this way for much longer. So anyway, if you found value here today, I'd appreciate it if you could drop a like on the video. It really helps. Or throw a comment. Hit dislike if you disliked. Let me know if you want to see anything specifically from me. Throw that down in the comments. Make sure you subscribe, turn the notifications on if you want to stay up to date with all my trades. And in the meantime, look after yourselves. Take care. All the best. Cheers. Bye.